What if you could enjoy uninterrupted compound growth while having guaranteed contractual access to capital in a known interest environment where you control the repayment? Hello and welcome to the Durham Talents channel. My name is Jesse Durham. For today's installation in our EncycloMedia series, we are going to address the policy loan. So, for a properly structured whole life policy with a mutual company that pays dividends for the purpose of implementing infinite banking, a policy loan is possible because as a part owner of the mutual life company, as a policy owner with a mutual life insurance company, you have a guaranteed death benefit. So the future guaranteed death benefit has a net representation, a net value today in the cash value of the policy, of a whole life insurance policy. So because the insurance company is promising a death benefit in the future, that contract means that you have a growing net present day value of that future death benefit that can be leveraged, that is collateral for a policy loan. So because the insurance company has guaranteed to pay you that future death benefit, they must put your premium dollars to work. They must put capital to work to provide for that death benefit. And of course, the mutual companies that I own policies with and that I would encourage you to pursue policies with would be companies that have been providing death benefits without fail for over 100 consecutive years, plus paying dividends. But be that as it may, the insurance company is promising you that future death benefit. There's a cash value, the net representation today of that future greater number. The cash value will be the collateral for any policy loan that you can make because, again, the insurance company has to put capital to work to provide that future death benefit. And as a policy owner, as a part owner of the company, you are first in line ahead of any commercial real estate deals, ahead of any joint ventures, ahead of any bonds, ahead of anywhere else where the insurance company would have put that money to work to provide you with that death benefit. So as the policy owner, you're first in line to be able to make a policy loan. Now, when an insurance company makes a policy loan, they're making a loan from their general account. This is to confront what's touted from financial gurus and entertainers on the wide webs who say that the insurance company is lending you your own money back and charging you interest on it. No. When you've paid a premium, you've bought a good or a service. You've bought a good or a service. That's no longer your money. But your money in that contract, pursuant to that contract, did create a death benefit, did create a cash value, and you can leverage, you can collateralize that cash value via a policy loan to have contractual guaranteed access to capital without interrupting the compounding that your premiums have created. In a known interest environment, there may be fixed interest rates or variable interest rates depending on your policy, depending on your company. But either way, you're going to be in a known interest environment for your whole life because there will be limitations, and that will be in your policy contract, whatever the number will be, whether it's fixed or variable. So you're operating in a known interest environment without interrupting the compounding of the premiums you've paid. And furthermore, this loan is going to be unstructured, meaning if you have a cash value that you collateralize, you take a policy loan, the repayment of that policy loan and or interest is unstructured. It's up to you when to pay that back, how to pay that back, if to pay that back. Now, I'm, of course, going to encourage you to be an honest banker. That's one of the staple principles of becoming your own banker, of the infinite banking concept, is to be an honest banker. Don't steal the peas. But all the same, a policy loan is unstructured, meaning if you decide for a period of time that you will only pay policy loan interest to the insurance company, you can. You can decide that you will pay principal only on a monthly basis, on a on a quarterly basis, once a year, however it is that you want to structure that, because it's an unstructured loan with the insurance company, because essentially that policy loan just represents a prepayment of a portion of the death benefit. So again, that cash value is a net representation of the future death benefit. So a policy loan is essentially a prepayment of that future death benefit. Here's an example. Let's say you had an outstanding policy loan and you pass during having that outstanding loan. The insurance company will simply deduct whatever it is that you already accessed via the policy loan from the death benefit, and they will send the whole rest of it, of course, tax-free to your beneficiaries. So again, a policy loan from a whole life policy with a mutual company that pays dividends allows you to continue to compound your premiums for your whole life without interruption. You can collateralize your cash value, so you have a self-collateralizing asset that you can leverage to have guaranteed contractual access to capital in a known interest environment in an unstructured manner, so that you can actually become your own banker. You can use the properly structured whole life policy with a mutual company that pays a dividend as the ideal asset for a banking entity, a privatized banking entity. And then, of course, you could be talking about a system of policies wherein you can take these policy loans for your need of finance. I've used policy loans for all sorts of things in our lifestyle. We've used policy loans to pay off bad consumer debt and be able to recapture that into our privatized banking system. We've used policy loans to finance our family vacations. We've used policy loans to be able to finance real estate investments. So I'm an open book when it comes to how we've used our policies. Remember, this is the infinite banking concept. So if you've not read the book, I would encourage you to check out Becoming Your Own Banker by R. Nelson Nash. Also, I have a free introductory presentation on our website and my calendar link, so you can watch an introductory presentation on the infinite banking concept and get my calendar so we can address what questions you may have and help you see how this could apply to your household or your business or your investing. So I hope that this has been helpful for you. I hope you have a great day. Take care. We are going to discuss what if you, yeah, right? Am I ready?